welcome to Managing Your Finances in Uncertain Times. I'll be introducing our panels very soon, but just some housekeeping. Again, we're on Zoom, we're broadcasting on Facebook Live. All of our panelists will be around to take questions as we go through. And we are recording this as well, so we'll be following up with a number of things, including a recording once the webinar is done. Now, before we get into any detail, you'll probably hear us say this a few times throughout the webinar. We are discussing finance, we are discussing personal finance, but none of the advice or none of what we say here is to be construed as financial advice specific to your situation. Of course, if you need that specific advice, please talk to your own accountant or your own financial planner, because we are not giving specific financial advice. We're talking in general terms. So, as I said, today's webinar we've pulled it together around managing finances in uncertain times. Of course, we're all painfully aware of what's going on around the world, and here at Rounded, we have a great network of people that have helped support our business and our customers over the years, and so we wanted to bring those together to try and help you guys, our audience, in terms of anything we can do to help make what's happening to everybody around the world a little bit easier. So without further ado, what I'd like to do is to introduce you to our panel. So we'll go from right to left, and each of our panel members will give you a little introduction to themselves and who they are. So first of all, I'd like to introduce Mark McLeod, the CEO of Roll It Super. So Mark, give us a little introduction to yourself and what Roll It Wealth does. I shouldn't say Roll It Super, Roll It Wealth.
Yeah, thanks for that. As Ollie said, I'm the CEO of Roll It Wealth. So we have a personal wealth app designed specifically for working Australians to help them with improvements to their cash flow, property and lending decisions, and their superannuation. So, it's really, we're really focused on the lives of sort of the 80-90% of us in Australia, as opposed to the high net worths as a wealth provider. Really pleased to be on this panel today. Personal finances are going to come under pressure, and so anything that we can do to support the community, we're here to do that.
Thanks, Mark. And next off is one of our great mates, and any of you that are in the freelance jungle will know Holly well. Holly Shoebridge from Oceans Accounting and Advisory. Holly, welcome. All right, well, there we go. First technical hitch. We might come back to Holly, not quite sure what's happened there. We'll go to Pete. Now, Pete is our resident TV star. The eagle-eyed of you may have seen Pete make his TV debut on The Project on Channel 10 the other night. Pete's, of course, from Gig Super. Welcome, Pete.
Thanks, Ollie. I think I've had my 5 minutes of fame. I don't know if I'm allowed to talk again today, but hi, everyone. So I'm from Gig Super. Gig Super is a new super fund. It's been built specifically for self-employed people and sole traders. The reason why we built a super fund for specifically for those people is because all the other funds are all built on the assumption that the customer is going to be an employee who's going to have contributions made by their employer. We know that self-employed people often find dealing with those funds complex and confusing at times. Self-employed people are a bit different. They're responsible for doing all the bits of their superannuation themselves. So we've built a fund that helps them to do that. So that's me.
Cheers, Pete. And last but by no means least, certainly as we try and get Holly back in the room, my great mate and business partner and CEO of Rounded, Nicholas Beams. Welcome, Nick.
Thanks, Ollie. Great to be here in my new office for I don't know how long. I'm, as Ollie said, Ollie's business partner, and alongside our other co-founder, Grant McCall and Igor, here at Rounded, which is, as we know, accounting software for freelancers and sole traders. A bit like Pete, we created Rounded because all the other accounting applications, the majority of them are designed not for freelancers and sole traders. They're designed for larger companies. So that's Rounded. My story is 22 odd years in the making, and I've run a number of businesses, a recruitment company, a payroll software company, and now obviously into accounting tech with Rounded. I'm particularly pleased to be here today to share some stories. Ollie's asked me to share about my journey over those 22 odd years, specifically having lived through as an entrepreneur the GFC, and before that the post 9/11 downturn. I use the expression, I know how to survive and I know how to thrive. And right now we're definitely in the first category, but the second, thrive, I guarantee you it's coming. We've just got to stay focused. Thanks, Ollie.
No worries. Well, Nick, we might stick with you actually, given we were going to start with Holly. I think she's just navigating her own technical issues and hopefully she'll be back soon. But perhaps share with the group, a sort of overview of the story of your business career. Hasn't always been plain sailing, as you said. You've been through a couple of difficult times. So maybe share firstly just a little bit of that story, and then perhaps we'll look into more of a mindset around how you navigated your way out of that, because I think mindset's really important for this kind of thing. So yeah, just a quick overview of that story, Nick.
Sure. Well, this Corona, the Corona downturn will be my third. So it's my personal hat trick. A long time ago, nearly just under 20 years ago, we had 9/11, or it was actually 12/11 for us. And at the time, I had a recruitment business with a great large number of on-hire labour, so temps. And I remember walking into the office on the 12th of September, because back then I didn't have a mobile phone, so I didn't watch the news the night before. And I looked at my business partner, who was in tears, at 7 a.m. on the 12th of September. And he said, the world just changed. We've just turned on an axis. I had 11 recruiters, 11 employees at the time, and like I say, a huge number of on-hire labour staff. 6 days later, I had 3 recruiters, and I believe about 90% less temps. And that's a pretty scary sort of spot to be in. It's a spot that a lot of people right now are in. And it's particularly tough. The way I got through it, Ollie, was by just focusing on what I can control. I live by this motto: planning to fail is failing. Failing to plan is planning to fail. It's so true. So I could talk forever, so I won't. I see Holly's back on, so over to you, Ollie.
Yeah, okay. We'll just let Holly back in. But whilst she's coming in, so I really want to sort of understand. I think for people on in the webinar, give me some. When all hope is seemingly lost, right? So you've dealt with pretty much your business crumbling around your ears due to circumstances beyond your control, right? Which is something that everybody seems to be facing at the moment, right? Where do you start? How do you start with taking a deep breath and then trying to work out, like, what are the things I should do first when I'm analyzing my business and, I've got all of these other things going on? Like how did you get through that initial all hope is lost feeling and begin to continue to move forward?
By controlling what I can control. And in business, being a freelancer, you're a sole trader, your life is mixed in with your business. It's a bit what millions of us around the world right now are experiencing, whether we're, and particularly those who are still employees, working from home. Life is mixing with business. Us freelancers and sole traders have lived that at merged reality forever. The first thing you do is you pull out your bank statement from last month or last quarter, download it into Excel or Google Sheets, and go through every line of it in meticulous detail and rank every line on a scale of 1 to 10 of, I just made this word up, essentialness. So 10 is you can't function without it. You'll be surprised how many lines, things that you paid for last month, you'll be surprised how many actually fall under 5. And this is the time, like I say, it's not about thriving right now, it's about surviving. So rank everything from 1 to 10 and, be honest with yourself and make a call. You'll be surprised how much you can cut out of what you're going to be spending money on in the next month. And,
Awesome.
and that's the first point I'd do.
And we might come back to that because we've got Holly back on the line now. So Holly, you missed the opportunity to introduce yourself. So maybe let everybody know who you are and what you do.
Yeah, awesome. Sorry about that technical glitch. So I'm Holly, Director of Oceans Accounting, based in Sydney geographically, but providing services predominantly web-based. So servicing clients all over Australia, specialising in creative industry and working with startups.
Fantastic. So, Holly, one of the things we were really keen to get an insight into from you today was just an overview of everything that seems to be happening. It's no small task. Just tell us everything about the government stimulus package for sole traders. What's your synopsis and take on where things are at with that?
Yeah, for sure. All right. There's quite a bit to the stimulus package. So I've just kind of identified the key points that will impact sole traders and freelancers and individuals. So just before I get into that, for any freelancers that do employ people, there are some great cash booster incentives. So before you lodge your March BAS, have a chat to your accountant just to see if you are eligible for any of those. But for everyone else that's not employing people, there are sort of 3 main prongs to the stimulus. And we'll provide a link, I think, that will highlight a summary of what's available. So the first one is better income support for individuals. So that's largely made up of like the job seeker allowance, which is a fortnightly payment. Approximately, I think it ranges from about $565 up to $790. And then in addition to that, there's a coronavirus supplement, which is being paid fortnightly as well. And I believe that's $550. So to access that, you need to get in touch with Services Australia and let them know of an intent to claim. There are some significant queues both in person and on the phone, so be patient, but it's worth letting them know that you intend to claim, and then they can work through the criteria to determine what level of payment may be optional or available for you. The next second prong, what's available for sole traders, is early access to super. So there's the option to access superannuation funds, obviously in extenuating circumstances. They've opened up 20K. 10K can be accessed between now and 30 June, just a little over 3 months, and then 10K in the next financial year. And I believe applications can be made from mid-April. So the criteria requires an individual to either be unemployed, on the job seeker payment, or their hours. So for many sole traders, they've just lost a whole bunch of work for the foreseeable future. So if you've had work drop or your hours drop by 20% or more, then you could potentially be eligible to access that super. I must point out though, with this option, it's important to consider superannuation is a long-term investment. So by accessing 20K now, what that might be worth come retirement could be quite significant. So we'd consider that a last resort option.
Holly, we might just get Pete to do the superannuation bit.
Yeah.
So we've got a segment on super in a bit. So yeah, we'll just move on from
Holly's nailed it. So no, all good, all good. I mean, the only Holly, I saw an estimate earlier in the week, which was here on that point of, for a 25-year-old who takes up that option to withdraw $20,000 from their super, could cost that person as much as $200,000 in their retirement balance. So, I think it's a really good point that you raise. It's actually interesting that this is called stimulus, right? Because it doesn't involve you're basically giving the money to yourself. It's not really stimulus in the sense that all the other bits of stimulus are where you get money from the government.
Yeah, that's it. So we'd hope that people will access the income support ahead of their own savings or borrowing money. Yeah. So I'll get to I'll skip the super. Sorry about that. And then, so the third option is unsecured loans. So they're offering business loans. It's called the SME guarantee. So if you need funds to fund your business, you're a sole trader, the government are backing 50% of these loans. So you have access to get these loans from lenders, and they're relaxing lending criteria. So again, if you're signing up for this kind of thing, just be aware of the small print, know what the cost is to you over the coming years or however long you choose to repay these amounts. We don't want people strapped into loans that they might be struggling to repay when things return to some kind of normal.
Cool. So if there's obviously a huge amount of information, and as you said, we have collated a Google file. I will actually put the link in chat in a second so that you can all jump in. There is only one Google Doc in there at the moment, so we've collated a whole heap of links and resources around the ATO, the WHO, and even stuff. Great links that I found of ways to amuse your kids while you're at home. But if you're a sole trader, Holly, and where would you suggest that somebody starts? What's the first thing that you should do if you're looking to take advantage of what's on offer for you as a sole trader at the moment?
Firstly, I'd be heading, there's a link that you've mentioned that we'll be providing. It summarises what's available. So the first step would be looking for income support. So you're not accessing your own savings. So head to that business.gov.au link. It'll summarise what's available. Then you might check out the Treasury website if you like a bit of a read. That absolutely, it's sort of the horse's mouth, so to speak, and identifies what is available, and that's constantly being updated. And I'd also recommend reaching out to your accountant because they can work through your personal circumstances and determine what might be feasible and look at your cash flow and help you navigate these challenging times.
Awesome, thanks, Holly. Well, we'll certainly be coming back to you in a little while. So we've looked at we've sort of scratched the surface a little bit with business finances. I can see some questions coming in. So actually, we might we've got one on super, so we might save that till we talk to Pete. But I wanted to perhaps go to Mark now, because obviously, as a sole trader, you've got not only business finances to worry about, but personal finances too. And that's obviously at the moment centered around cost of living. For some of you, they may be one and the same. But Mark, obviously, Roll It Wealth is around, I think you talk about helping people to make smarter financial decisions. So perhaps talk a little bit about, first of all, how you do that and how the app works. We'll be giving you some information about the app soon. But also perhaps share with us some of the ways that you're helping your users to make smarter financial decisions.
Sure. So I think right at the start, we talked about mindset as it relates to times of scarcity, and this is that time, and nothing really provides probably hope on your finances more than having a really good grasp and control over where you are, and then being able to start to make decisions from there. So I guess number one is luckily these easy ways to get on top of your finances. You don't need to pull out the bank statement and put it into Excel. There'll be a link so you can get free access to our premium subscription to our app. It'll take in all your bank, super, and credit card feeds. It'll automatically calculate your spend in each spend category, and then you'll start to pull that, and you can start to set budgets against that or understand where your money's going. And off the back of that, you'll also start to understand where your net wealth position is. So understanding whether you're going backwards from a cash flow perspective, and then what assets you've got available. And typically it's in property and superannuation. So number one is just really take stock of where you're at. Now, you find from a mindset perspective, when things are going well, it becomes a bit of an admin task for you personally to do that. This is the time to, probably get out of your comfort zone, and if it doesn't come naturally, working through exactly where you're at financially, it takes 10 minutes to do it, right? It's 10 minutes really well spent. You've probably got the time and also the motivation at the moment to do it. So take advantage of that, and then get start there. The next one is, it's probably again a mindset thing. Is often we're especially if you're a sole trader or you're a founder of a startup, you've got a lot of pride, right, and what you're doing, and some independence that's really important to you. And so asking for help or taking advantage of help when it's there, sometimes it sort of hurts you a little bit, right, when you're looking for a hand up. And this is the time to kind of try and park those feelings and the ego, and take advantage of anything that's available to you. So absolutely, as Holly was saying, there'll be hand ups. We'll get to super later. I don't think pulling down on your super at the moment is a hand up at all in the long term. So absolutely as a last resort, but there's definitely hand ups from an income perspective. Just take advantage of it. It can feel a bit awkward taking that because it's not who you are, but take advantage of it. Now we recommend a whole bunch of, I guess, everyday money hacks as well to help your cash flow. So we provide our users something like 4,500 products and services that are at a discount, and that includes Dan Murphy's, Woolies, Coles, Target, Kmart, pharmacy, anything. So all your non-discretionary spending, we have discounts from 5 to 50% discounts on all of that. Now, take advantage of our discounts, but there's other places you can go. Catch.com, Honey. There's a whole bunch of apps that make available these discounts. Just use them. And again, it's 5-10 minutes pre-planning to get 10% off your Woolies shop for the week. Now, if you've got a family like I do with 3 kids, would spend $300 easily a week on our groceries, and I hate to think what we're spending on our alcohol bill now that we're all stuck at home with them. But you'd be surprised. I mean, our users that are utilizing it just for petrol, alcohol, and groceries are saving $2,000 a year just by getting discounts on all of the non-discretionary expenses. So there'll be a discount code to get free premium access to our platform. Get in there and just start using the discounts every week. It's just a small amount of pre-planning, and you can sort of money hack all your day-to-day expenses. The next thing to do is to look at your 2 major assets. So look at if you've got property or you're a renter, which is probably your major expense, and the other one is your superannuation. On the property side, again, our mortgages are one of our most laziest. Our property and our mortgages on our property are probably one of our laziest assets, along with super. So I think Australians spend $4 billion a year in excess interest on their home loans. So again, there's a tool in the app. Just put in your property address, and then it'll give you an immediate annual saving on your home loan if you refinance with your existing lender. So this is not going out and necessary refinancing at this point in time with a new lender. It's understanding whether you can save money on your mortgage with your existing lender. Normally you can. Existing customers never get the same deal as new customers. They have a retention team in the bank whose sole purpose is to ensure that they retain you as a client. And this is the time. Understand what you're spending, and you might find that there's a couple of $1,000 a year just in immediate savings that you can make on your mortgage. Now it's good to know where you're at, because if the stimulus continues to evolve as it is, maybe there'll be repayment holidays on your mortgage anyway. But don't just hang out for that. Just make sure you're not paying $1 more than you need to on your mortgage, and get that sorted. Now, if you're a renter, there's a whole bunch of things that are starting to get discussed now around rental holidays and the like. Again, you can put into our app that you're renting a particular property, and it'll show you what the rental prices are for all the properties around your area, so you can understand at least whether what you've got, your 2-bedroom apartment or whatever it might be, is sort of in line with what the market is for rentals of that particular type. Again, it's just, information is power. It's really good to know. And then if you're having a discussion with your landlord and you want a reduced rent, or they're trying to up your rent, it's good to know what other places are going for in the area, and that you're not going to get, inadvertently judge yourself. If you can get $20 off, or not have that increase of $20 a week on your rent, that's money back in your pocket, and every dollar counts at the moment. And the last one is super. In the app, you better type in your super fund and the investment option of the fund you're in. It'll then rank and compare the net returns, or the returns on that fund and that investment, against every other fund in the country. So you get to understand how your long-term performance has been. And when we get into super, I'm happy to contribute just a little bit around how markets sort of work at this point. But if we look at the GFC, those who not only had their money left in super and they didn't touch it, but also had moved at a particular time to a more aggressive investment option, their returns are something like 200% more than those who took this opportunity to move into a very conservative position in their superannuation. And it's like putting your money in the bank at the bottom of the market and then missing the bounce. And, so you double hit yourself, or potentially it could be a triple whammy if you're pulling money out of your super at the bottom of a market. Can absolutely be a disaster for you long term. So as Holly and Pete will talk about later, it's a really challenging when you're desperate for the money, and the opportunity to take it out of your supers there. It's hard not to do it, but it is it's got hair all over it. So just be cautious. So but anyway, it's first of all, get control, then take advantage of any money hacks you can get and discounts on your non-discretionary expenses, and then go to your bank armed with information to make sure you're not paying a cent more than you need to on fees or mortgages, and make sure that you're in a position of strength if you have to negotiate with your landlord. And then once you've done that, then start to tackle the superannuation decisions that'll be ahead of you.
Cool, thanks, Mark. And just on behalf of everybody, thank you so much for making your app available to the Rounder community. I'm sure that they're all going to be able to take really great advantage of the discounts that you're offering and you're able to provide. So on behalf of everybody, thank you for that. That's much appreciated. So let's turn to Pete now, finally deal with this topic of super, because it does seem to be one of the most divisive and polarizing parts of the conversation, in terms of the fact the government have enabled everybody for the next 2 years to take $10,000 a time out of their super. So perhaps talk about why they might do that, Pete, and perhaps the pros and cons in a bit more detail.
Yeah, so I mean, when we think about that, the element of the stimulus package, I guess the first thing, people have got some real realities at the moment, right? Where, invoices aren't getting paid. I've just lost a bunch of clients, and, I've still got to put food on the table. So, if people don't have any other options, then, super's there, and you do what you need to do. But, I guess that's the key message of, have a look at what are the other elements of the stimulus package that are available first, before you look at that one, because it is effectively taking money out of your own pocket. And then, in terms of, superannuation overall, I think we've probably already covered it with the other guys, pretty well. The key points are really to, remember that superannuation is a long-term thing. It's a long-term investment. Unless you're getting really close to retirement age, you've still got a lot of time. And what we know from, previous corrections in the market, whether it was the GFC or the dot-com bubble or the crash of 87 or, the Spanish flu, which was 100 years ago, each time one of those events has happened, the market has recovered. So we should keep that front of mind. And then, don't try and time the market. Even the professionals can't time the market. It's really natural when you pick up the newspaper or you read the newspaper every day and you see these, really negative headlines every day, to think, oh, well, therefore I should go and reduce the amount of risk in my portfolio and move to a more conservative option. And then, when when we get back to the good times, I'll move back to a high growth, portfolio at that point. And the danger with that is that if you do, respond and reduce the risk in your portfolio now, that you risk crystallizing those losses that have already occurred. And as Mark mentioned before, you miss out on the rebound. And, naturally people think they're going to be able to pick when the rebound is going to occur, but it's notoriously tricky. There's nobody that can really do it, with absolute certainty. And so, the best thing to do is just remember that super is a long-term investment, and that'll sort of help you psychologically to ride out that bad news cycle that we're currently seeing.
So, Pete, generally speaking, and I think we'll maybe try and take some questions here. One of them from Fiona, saying that do you have any suggestion for minimising the hit on super? Should we wait it out? Should we switch investments to a more conservative fund? Should we keep contributing, in some way, shape or form, or just stop altogether? What would you say? Obviously, again, as we say, not specific personal financial advice, but do you have a sort of a general feeling as to, perhaps, the best way to managing your super at the moment?
Yeah, I mean, I think, there's sort of two ways of looking at the market at the moment. One is you could say, it's terrible. There's so much risk around in the world right now. We don't know what's going to happen with coronavirus and what the impact is going to be on economies and on companies. So therefore, I'm not going to invest. But, there's another school of thought which says, well, the market is now, 30% cheaper than what it was, a month ago. And so some people look at that and say, well, I'm actually getting shares at a 30% discount, or whatever, how much the market's fallen by. So there's two ways of looking at it. And again, if you're looking at it as a long-term investment, then, you could look at, putting money into super now as, taking advantage of buying whilst markets are lower. But I think, again, that's probably starting to try and time the market. Superannuation, for employees, they're putting money in every quarter. And the benefit of that is that you're putting money in when the markets are high, but you're also putting money in when the markets are low. And that's probably the key message, I think. The key takeaway is just to be consistent. Don't try and time the market. Just keep doing what you do. If you need to reduce the amount of money that you're putting into super, yeah, totally fine. Totally understandable. And then, dial it back up again when your income goes back up again. But don't try and time the market. The other one that I thought I'd mention, because it involves the government giving you free money, is the government co-contribution. So basically, the way the government co-contribution incentive works, if you're earning less than $53,000 per year, and you make a personal contribution into super, well, the government will, for every dollar that you contribute, the government will put another 50 cents in, up to a cap of $500. So, or up to a maximum of $500. So, if your income has taken a bit of a hit as a result of this, making some contributions into super, and it only needs to be $20 a week. If you do $20 a week, then at the end of the year you will have contributed $1,000, and you get to maximise that government co-contribution. So that could be another option that's out there for some people.
Awesome. So I might go back to Holly. Just to perhaps go to a couple of practical things that we can do. Again, the caveat: this is not specific financial advice, but people may be finding themselves now working from home, incurring additional expenses that they hadn't before to be able to support their businesses. Can you give us some tips on an approach to expenses and how to sort of work out what can I claim, what can't I claim, what are the sort of do you have a obviously in conjunction with your accountant, do you have any tips on how people can make sort of instant gain an instant benefit from being just a little bit more rigorous around their expenses and things like working from home and home offices, that kind of thing?
Yeah, for sure. I think the first step is record keeping. So just keeping a really close eye on what you are spending your money on and how it relates to the home office. Keep a record of sort of how many hours you're on average doing from the home office, or if you used to work in an office in the city and now you're working from home because the office is shut for the interim, just keep an eye on what you're spending and how many hours you're doing from the home office. There are two sort of claims for home office. So obviously, as mentioned, it's not tax advice. This is general information on the ATO website. So we'll provide a link to that. But you can generally claim running expenses. So that might include lighting, heating, cooling, a portion of depreciation on your laptop. You might look at mobile phone, a portion of your mobile phone that's used for work, a portion of your home internet. So keeping a track of those actual expenses. And then when it comes down to it, there's sort of two ways to claim that. So you can claim a portion of the actual expenses, and there can be quite stringent recording requirements from the ATO, so that can be a little bit clunky. The simpler method is claiming a flat fee of, I think it's 52 cents an hour for each hour you work in the home office or from home. So that just there are claims that are available. So have a chat to your tax agent or your accountant, and they'll be able to work out what's applicable for you. But the simplest way is just keep some tidy records. Actually, I will just touch on one more point. For those that are running a business from home, so there will be a lot of sole traders that are running a business from home. If you've got an area exclusively set up for business, so say it's a separate room or even a studio at the back, and it's purely for running your business and you're servicing multiple clients, there may be an opportunity to claim occupancy expenses, which can include rent, mortgage interest, council rates. There are really strict requirements for getting this kind of claim across the line, and definitely speak to your tax agent. But if you are running a business from home, there is potential to claim that. There can be repercussions from also making claims like that. So it's important to have a chat to your accountant. But if you can get a claim like that across the line, it can be quite lucrative for you.
Awesome. Thanks, Holly. And Nick, what about from a business point of view? Obviously, you've spoke about, again, we've looked at cost cutting and that approach to essentialness that you detailed before. But what about, it can be, everybody's going through this difficult time. What advice have you got around, continuing to, keep your business going, staying in contact with clients, ideas for adding additional value? We're all having to do things over and above what we might normally do. What's your approach to that?
Well, I won't talk about the finances because we've got three experts already on that. But I do want to talk about mindfulness and mindset in these times. Mark touched on before the fact that we have a bit of spare time on our hands now, and I'm not wanting to dilute the fact that the first thing to look at is finances. But assuming that you are able through whatever means to get yourself in a position where you can then focus, then it's time to get back to work as much as you can. When Lehman Brothers collapsed and triggered the GFC, that was my second downturn. And again, as I've just said, the first thing we did was look at finances and got ourselves into the best position I possibly could be in, given the circumstances. The second thing I did is realised from the first downturn is that the best time to build long-term relationships with customers is when you've got the time to actually give them the time. Ruslan Kogan, who's now a super successful Australian businessman, he talked once to me about the fact that in his very early days, he didn't have any money and he was desperate for a Chinese goods manufacturer to give him TVs on credit. And they just wouldn't, because they didn't know whether he would come good with payment, because he was in his 20s and he had this business called Kogan.com, which had been alive for only a month or two. And so he thought, well, how do I add value when I've got nothing else to give other than my time? And he realized that this company had an English version of their website that was just not readable. So he rewrote their website for them, and he didn't charge them. A week later, out of thanks, they decided to give him credit. And that's not necessarily the pivot of his success. He's got other success stories there. When the GFC was around and I had plenty of time to spare, I spent that time talking with customers and just being really honest and having as many conversations as I could, and doing some work for customers, projects that we'd talked about that they said, oh, we'll put that off, we can't afford it right now. You remember those conversations, you jump back on the phone and say, look, let me help. Let me do a review of whatever it is the services you're providing for them. The other thing is, I'd like to say is that it's super important to have downtime. It's super important to have a routine. I work from home 3-4 days a week here in Melbourne, and I've been doing that for the last 3 years. I do little things like I dress. I'm a pretty conservative dresser, but in the morning I make sure that I do some exercise, whether it's just walking the dog. I make sure that I shower and shave every day, because it's very easy to stick tracky dacks on and work from your laptop on the couch. For me, I need to have a shower, get dressed properly as if I'm going to a meeting in the city with a client, sit at my desk, make a cup of tea, and remove. It's a little difficult now given that we're all working from home, but 2.5 weeks ago when we weren't, but I was working from home, I'd make sure that the kids' stuff was out of the space that I work in, and just stick to a routine. It sounds so simple, but a lot of us don't do it, and it helps you then focus on being able to add value to customers, and they remember you for that.
Pretty simple stuff. I like that advice, Nick. Thanks. Awesome. Well, look, I think based on what I can see, there's a number of questions that are flying around. So I'm going to do my best to go through these logically, guys. So we're happy to take questions. Obviously, we've got sort of 15 minutes left before the top of the hour, and all of the guys have graciously said that they would hang around and ask questions. So now's the time. I do know that we had a few issues with the Facebook Live feed that I've now restarted. So for those of you on Facebook Live, apologies. We are monitoring that feed as well for your questions. So I might start with one for, this is from Travis. And I think maybe for Holly, just wondering about the limitations of support around combined income, i.e. if in a de facto relationship and my partner's still working, can I still claim as a sole trader, or is it based around combined income?
My understanding is, so they've relaxed regarding the job seeker payment, Services Australia, they've relaxed the asset test. However, I think they're still doing some level of income testing, and they might look at family or household income. So my best recommendation would be to contact Services Australia directly and let them run through your scenario, because there might be things that are changing constantly that they might be able to apply and assist you in accessing those funds.
Awesome. Thanks, Holly. Yeah, contact, would that be Centrelink or the ATO?
So it's Services Australia website, but I think it's Centrelink. I don't know if it's still called Centrelink. And you can also access it through your MyGov account. I believe there's an intent to claim, and they'll contact you once you've hit that button.
Awesome, thanks. So we've got one from the Facebook feed. This is from Joel. Hey Joel, if you're still there. And I think this is going to be directly to Pete. And Pete, he asks, is there, of course I've lost the question now. Is there a maximum TPD available with Gig Super? And maybe if you can explain what TPD is for those of us like me that don't know.
Yeah, so TPD is total and permanent disability insurance. So normally inside your superannuation, you've got death cover in case you die, total and permanent disability cover, in case you're unable to work because you've been totally and permanently disabled. And then sometimes you've also got income protection cover. Within Gig Super, you can apply for up to $500,000 worth of total and permanent disability insurance with just a short questionnaire. If you need more than that, then you're able to get it. But there is a longer questionnaire that you need to go through, and we send that off to the insurer, and they'll assess you on an individual basis for that. So, I mean, on that point, it's probably another thing for people to check if they've got a bit of time. Sometimes insurance inside superannuation is, again, it's been predicated on the assumption that you're an employee. And so what we find in some insurances is that if you then go to try and claim on those, you might have difficulties if you're self-employed, because the insurer doesn't recognise self-employed work as being work. And so if you're then trying to prove that you can't return to work, then you basically have a higher bar to get over than if you're an employee. So, it can be well worth having a look at your fund's insurance guide and see if they call out self-employed people as saying, some of them just call it out and say, look, we don't cover self-employed people. The others, you might need to have a look at that definition of work. Needless to say, the insurances inside Gig Super have all been built for self-employed people. So it's another one, just to make sure that, you're not paying for these insurances that may not necessarily actually, be of any benefit to you if you need to make a claim because you're self-employed.
Awesome. Thanks, Pete. The next question is from Olivia. This is an interesting one. Maybe Holly, this is back for you again. As a fairly new full-time sole trader and agency freelancer from this financial year, how do I prove that my work has reduced by at least 20% when I don't have that much work history? Perhaps, Holly, if you could explain what that 20% figure is and how it relates to, some of the benefits on offer, and then maybe we can answer the question.
So you might be able to do it via, if it's this financial year, P&L, so profit and loss statement. So if you started 1 July and we're now at the end of March, that's 9 months. So you might be able to prove your income coming in the bank account, and ideally you will have lodged a BAS. If you're not GST registered, then we can put together a profit and loss statement based on the income coming in your bank account, and you'd be able to show a significant drop in income based on funds coming in the bank account. I think that's how you probably go about it. So there will be a way to prove that audit trail.
Awesome, thanks for that. And again, back to Pete. This is like question tennis for Pete and Holly. Peter, what if you are self-employed and your income is variable? Like if you're not earning anything right now, would Gig Super still not cover this?
Is that in relation to insurance, I wonder, or?
Not sure if it's relation to insurance. Perhaps it is.
Yeah, in terms
it was by some. Yes, it is. It is in relation to insurance. So if you're not contributing right now, do you still get your TPD?
Yes. So TPD cover is based on a set amount, and say for instance, if I've got $200,000 worth of TPD cover, if I am then totally and permanently disabled, I get paid $200,000. There's not an income threshold that I need to prove. Income protection cover, on the other hand, they will, if you go and make a claim, they will ask you to prove that you've been earning that income prior to the point that you were disabled and not able to work. So, every fund is going to be a bit different in terms of the way that they ask you to prove that income. I know with ours, one of the ways that they look to do it is based on your previous year's tax returns that they'll ask you to, sort of prove that income. So, it won't affect TPD, but if your income is lower for a significant period of time, then it would be well worth reviewing your income protection insurance to make sure that you haven't got more income protection cover than you'll actually be able to claim on if you need to make a claim.
Pete?
And with most insurers, they'll only insure you for 75% of your income. So if you're earning $100,000 a year, then the maximum benefit they will pay you will be for $75,000. At least that's the way it works with us and with most of the other funds as well.
Can I ask a quick question for Pete? Pete, can you just clarify for us? I think the part of that question that just came through is that can you clarify? So as long as you have a superannuation fund, a superannuation account with Gig Super, whether you are contributing now or not contributing now, is it fair to say that so long as you have an active account, that the insurance policies are valid?
Correct. Yeah, as long as you've still got money in your account, and your insurances will still stay live. The exception to that, there was a new piece of legislation that came in July of last year, which was designed to protect people who aren't contributing to their super. So basically, if your superannuation hasn't received any contributions, or you've not engaged with your super fund in any way, like changed your investment options or sent them a letter or done anything like that, then your insurances can be turned off. The fund needs to send you an email or send you a letter prior to them doing that, to warn you that that's going to occur. But that is the risk of not contributing to super, that your insurances will be turned off, but that it needs to be for a 16-month period before that occurs.
Cool. Thanks, Pete. That's great information. So I think things seem to be, we've answered most of the questions. There are a couple in the chat feed, guys, that if you have put questions in there that we haven't answered, it's because I've made the decision that they're probably sailing a bit close to the wind in terms of personal financial advice, and probably not appropriate for us to get into that level of detail on this forum. However, we will be following up with some resources. I will happily share Holly's email address. Holly will, I'm sure, be delighted to arrange a time to talk to you about what she can do, her services, and how she can help your business. We'll also be following up with some resources. I've just seen some more questions come through, which I will go to. I'll have a look in a sec. The other thing that we're going to be following up with is a very short questionnaire after this. So we are looking for additional topics that we can pull together that will interest you and that will add value to what you're doing. We're going to be doubling down on our webinar content and podcast content soon. So we're also looking for guests. So if you think you've got an interesting story to tell, or if you think that you will be able to add value to a sole trader community by virtue of your expertise, we'd love to hear from you. And so we'll also be following up with the information from Mark and Roll It Wealth about how you can take advantage of all the great discounts again. So just before we finish up, the last questions is, well, actually, okay, so I think we're getting probably with that last question, I think it's Joel. It says anonymous, I'm guessing. But again, what I'll do, Joel, is I'll put you in touch with Pete so you can talk to him directly. We're getting into the PDS, the Gig Supers PDS, but probably, again, not really ideal for something like this. So guys, we're going to bring this to a close. On behalf of everybody at Rounded, I'd like to thank Holly, Mark, Pete and Nick for giving up your time and expertise. This is the first of many that we hope to do in terms of supporting our community and helping other people to in any way that we can to navigate this. Again, we'd love to hear from you if you'd like to be a part of one of these webinars. If we can dial down and dig into some of these topics in more detail, we can do something that's more specific. We'll be doing our best to do whatever we can content-wise to help you all. So, on behalf of everybody, thank you for being so engaged. Thanks for spending your time with us today, and we'll see you again soon. We'll be in touch with the recording as well. Thanks, guys.